Rob Price, another gentleman who has forgotten to put on his rugby jersey, but what he did try to do is wear rugby colours, kinda.
I'm showing solidarity with Japan, the brave blossoms.
The guys who
beat us.
Okay, all right. I was just double checking with that. Rob?
I'm supporting everybody in safety.
Just supporting everybody. Thank you for making the time to join us. It's been an interesting week on the domestic front with the Grayston Bridge and all other developments and VITs and so on and so on. But let's take a step back. Let's first go to the global space. Let's look at the global macro matters that matter this week. And in particular, again, it's the big conversation about the US interest rate hike and the Fed trajectory broadly. Your insights about what this week was all about?
Yeah, it's fascinating. We've basically seen a trend weaker in US economic growth data. We saw the inflation data come out this week, and it was particularly soft. It actually wasn't quite as soft as expected, but soft inflation, soft growth in the US, and a significant repricing of Fed rate hike expectations as a result. I think we, as you said, we kind of need to draw the lens back from this, though. That I still think that even though the Fed is less likely to hike interest rates, there's still a lot of tightening going on in the monetary environment there in the US. And if you compare that to the rest of the world, where in Europe they're loosening, in China they're loosening, in Japan they're loosening, in relative terms, the US and the Fed is actually tighter because they're not implementing quantitative easing. So I think that's kind of pulling back the lens. That's actually really what we should be focusing on. And I'm not sure if this current, revival of the risk trade, this flow back into the rand and emerging market currencies is actually sustainable over the coming months and quarters.
Well, we've got Clive Ramatabela-Smith late. He's
and he's walking on to set now, and thank goodness, dressed in a heritage legacy. This is what I'm talking about.
This is a walk of shame, I'll tell you. It feels so terrible.
Now, Clive, this jersey, I said that Nozzie's jersey was a little bit out of date. I think that's seen
This is even worse.
That's seen a few games.
Absolutely.
Is this what, from 94, 95?
This is from the Rudolph Strauss
No, this is 95. This is 95.
Wow.
This is legendary. This is why we are where we are.
This looks like Constraldraat and Real Australia to me.
I know. The problem is that it's got a bit of belly that it normally should.
That means you'll be a great prop forward.
Absolutely. As long as they don't spoil my ears, then I'm fine.
Those are the guys that do this?
That's right. At the front of what they call scrub.
Okay, I got it. Clive, it's lovely to have you. And happy belated birthday for yesterday, Mr.
Oh my goodness!
Exactly.
Somebody found out.
We're waiting for the cake.
What we do know, he's 20 years older than he was when he got that jersey.
Okay, let's.
But Rob, you and I forgot. I mean, I do have a couple of jerseys at home, but I hope there's an opportunity still to wear it next week because we need to stay in this tournament. What are you predicting?
That's you scaring me now because, I think that Welsh team is looking very, very strong.
Exactly.
And that's why I'm worried as well. But do you know what? At the end of the day, whether we lose or win, at the end of the day, we're still Springboks, aren't we? Or we're still South African?
No.
I'd
be very, very upset.
Box by 6, we got it.
I can't believe this.
Okay,
that's it.
Somebody was saying that they ran a model, and the model says that Boks win by 4 tomorrow.
A model.
Yeah. Like financial modeling, but you run. The data is the track record.
I believe any model, by the way.
Yeah.
But I always think.
And I disagree with any model. So.
You disagree with any model.
But Clive can't be a rugby. He sounds like a football commentator.
I prefer my football, obviously,
football,
and you know that Arsenal has been doing relatively well, so I'm very happy about that.
I think I need to interject. I think if I don't interject, we're either going to speak rugby and football, and that's going to be the rest of the show.
Can we talk business?
Yeah, can we get back to business? So Rob was
so responsible.
I know it's part of being the eldest. It's just it's one of those key traits. So Rob was explaining the big global monetary play at the moment with the Fed in focus. But maybe let's just weigh in on China in particular, Clive. China this week with the data that came out there on Monday. What does this tell us about the state of the Chinese economy, in particular with regards to its recovery or slowing down?
It tells us two things. The first one is the fact that the data that we've been reading is actually incorrect because it was exposed by HSBC that the fact that the PMI numbers have not been relatively in comparison with what's really happening at the bottom end. And the second part that is telling us is that the slowdown is much more drastic than we had initially anticipated. So that tells us that around 7%, you know, I mean, you don't give numbers like that. You don't say we are going to do around 7%. Every time that you put around something, it means that you're not confident. You don't know if you're going to get there. And this data is actually an indication that the data are correct. The fact of the matter is the Chinese market is slowing down, and people are moving out of it as quickly as possible and selling it for alternatives, and that they're not going to reach that 7%.
But there's a counter to that. Did you notice his grammar there? He said the data are correct.
Yeah.
Very unusual.
Instead of the data is correct.
Yeah, which is wrong.
The latter is wrong, so Clive is right.
Clive's right.
Yeah.
It's like the media. The media is plural, the medium is singular.
There we go.
Rob, the other view,
English lesson.
the other view with China is that, yeah, sure, it may be less than we think. But for a lot of the economies that depend on China, the commodities, it's still growth. It may be a bit less, but it's still going to drive growth.
Yeah, I mean, I hear that point, but I tend to kind of, you know, lean towards where Clive's talking around here. I think that the major point here is China is slowing incredibly, and any growth that is created there, the economy is also shifting from a productive side of the economy towards more consumption-based, and that's got a negative impact, additional negative impact for the commodity producers and exporters. And kind of just also pulling back the lens there on China. I mean, we've been on the show a number of times talking about this credit cycle in China was completely unsustainable. They created something like $15 trillion worth of debt since 2009. That's unsustainable. It never ends well. The growth data there is going to slow down, whether it comes out in the numbers or not. We're seeing it in commodity prices, and you just can't continue to try and create growth through debt. And there's lessons for all of us to learn. They're not just looking at China, but in the rest of the world. We can't think that we can create growth sustainably through debt, and that's just not a sustainable growth model.
So if we take all of these interplays and take a look at how it's impacted on the rand, we did see some recovery on the part of the rand. And maybe let's get both your comments, starting with you, Clive. Is this a rand strengthening story that we saw playing out this week, or is just a matter of dollar weakening? How do we read it?
It is. You're correct.
Both.
It's the dollar weakening.
Okay.
No, it is the dollar weakening. And maybe the concern is what are we doing on the local front, on the domestic front, to try and control the currency. And there's very little, I'm sure Rob will agree with me, very little that you can do to put those controls in place to try and pull back the strength of the rand, because it's so reliant on what happens outside. I mean, I just want to touch on something perhaps maybe we're touching on later on, but for example, an SAB deal where you think that South Africa would be at the forefront, but they forget that South Africa actually owns less than 10% of that particular stock. So it actually is irrelevant to what takes place on the local front. So these are some of the issues that have been raised in the past before. But now, because the reality is that the economy is so constrained, it's so tough domestically, they're starting to fill into the actual particular stocks that we all like. And I don't think anybody likes that. Can you imagine, I was thinking about it the other day, if AB InBev was to actually list in South Africa, you would actually have 25% of the top 40 belonging to one particular stock. You would actually have to rewrite the books on benchmark with regards to how you actually calculate what that would mean. So it is absolutely incredible. And I think that the currency that we have, the rand, as much as we all love it and we love the Mandela face on it, the point of the matter is it's not doing well internationally.
The Madibas.
If I can just jump in there quickly, I have to disagree just slightly with the first few points you were making there on the currency, because I mean, yes, the South African Reserve Bank and the Treasury have very little control over the rand in the short term, but they have all the power over the structural fundamentals which govern the rand. And the fact is, the structural fundamentals in South Africa that govern the rand are very weak and have been weak for quite some time. Things like real interest rates, the current account deficit, the budget deficit. These factors, yes, they can't alter them overnight, today, tomorrow, next week, then it's suddenly going to solve the rand crisis that we have on our hands. But over the last 3, 4, 5 years, if they were implementing much more prudent economic policy, the rand would be faring a lot better now than it would do otherwise. And we still have levers going forward. The Reserve Bank can hike interest rates. It probably will have a negative impact on the rand immediately. But once again, it's the much needed medicine for the economy and for the rand, these rate hikes, which need to be implemented over the coming year.
Rob, you're going to leave us at the end of this little section, and Clive's going to stay. So I'm going to ask you about, on the union side, we had the coal sector resolution. Now, the union sounded very aggressive. It didn't sound like they got close to what they wanted. There was a deal. And then on the other hand, we had Kasatu and FAWU saying they'd be anti that deal. So how influential are these union issues at the moment in the economy?
Well, the number's 2, and they're too influential. They're too influential in policy. Coming back to the things that government can do to improve the economic outlook, can do to improve the rand outlook. They need to have become some kind of stand against the unions. Now, don't get me wrong, I think unions have a very important part to play in the economy, but in South Africa, the unions have a huge amount of power, and they continue to interject in policy all over the show where it's not really their place, and it's clearly hampering the policy. We don't really have a coordinated policy trajectory because government's focusing on labour, it's focusing on business, and it's not really sure where it's trying to aim towards. And I think it's having an incredibly detrimental impact on the economy.
I think that's actually a very valid point, because I think prior to democracy in South Africa, there's a very clear target against which the unions were pushing against. So the unions were very instrumental in making sure that enough pressures were being put so that the transition to democracy was actually came to fruition. And now that we have democracy, I don't think that rebuilding and strengthening the economy is that target, and perhaps that's what it should be, because a lot of the decisions aren't always in favor of actually strengthening and enhancing the economy, because there's no common enemy that everybody is now fighting.
And it's incredible to think that the unions support only a certain section of the population. We must remember that they don't represent the poor people in this country. They represent a poorer segment of the population, but there's a huge number of unemployed, even poorer people in the country that are giving incredibly negative impacts from unionization in South Africa. The
unions are not into the poor. The unions are into looking after their members. It's got nothing to do with the poor. But thanks to Rob Price, investment analyst at ETM Analytics.